We're going to talk about tonight Tesla and more Tesla. We're going to talk about Elon Musk and his announcement this evening. We'll talk about the stock's performance and where I think it's going from here. And is Tesla stock a buy? We're also going to talk about the price action today in the markets. How are we looking? How are we looking from a monthly perspective? Meaning, let's not get wrapped up in the daily charts, intraday charts. Usually on Thursday nights, we'll talk about the weekly charts. Let's go really high level because something happened today that we expected. But I had hoped, and hope is not a strategy. So we closed out some positions today, and we raised capital. We were hoping and positioned for such that we would get a Santa Claus rally, and that is looking dimmer and dimmer. We may get it after the news this evening. We'll see how the futures are responding to Elon Musk's announcement that he's not going to be buying back, he's not going to be selling any more shares until 2025. So that's a big announcement, and it's important. So let's see how the markets are behaving. Hey, Tim, Merry Christmas to you too, pal. Let's see how the stock is behaving, as well as the market's response to the announcement. I'm looking to see whether or not you guys are getting this on your end. Hey, Bob. I officially changed my voter registration to independent. Good for you. GOP really let me down today. Horrible what they've done. I would renounce my I want to vote in the primaries. That's the only reason why I stay a registered Republican. That's it. I left mentally. I left the Republican Party a very long time ago, so I don't blame you. Merry Christmas to you, Lewis. Yeah, but you're not seeing. Are you seeing Thinkorswim right now, or are you seeing the Zero Hedge page? I'm having a lot of problem with my screencast here. I canceled my subscription, but I still have a year to go before it expires. So if you're not seeing, you're seeing Zero Hedge. Okay, I got to refresh my screen. For those, we're gonna do chart requests tonight. Please do not enter your symbols until later on when I ask for them, or else I'll lose them because I need to refresh my screen because I'm looking at Thinkorswim right now, yet you guys are still on this page here for whatever reason. Not quite sure. And when I go to refresh, okay. So there we go. All right. So no more share sales until 2025. How's the stock responding? Favorably. It's a nice move up higher off the lows, but let's face it, we have a lot of resistance immediately above at the 130 mark. So our day today with Tesla, I don't do a lot of day trading at all, but we did today because it was such a downdraft in the shares. So I did a couple of day trades here. We made money. Also with Netflix, we shorted Netflix, scalped the profit. Other than that, I'm just sitting, watching, and waiting. Now we do have a large position of options that we have sold premium on Tesla, and the implied volatility pumped a lot of juice, meaning a lot of value into those options. And as an option seller, I don't want that. So it kind of hurts me. So this should, assuming that we don't give this all up and fade tomorrow morning, this should take a lot of the implied volatility out of the Tesla shares and help bring down the value of those options, which is exactly what I want. As an option seller, I don't want all that premium pumped into the stock. The only way to get that premium out is through time decay and through implied volatility contracting. And that is certainly not what we saw today. So Tesla shares moving up higher. A close above 130 would have me a lot more confident that the shares are going to be able to hold these levels. Let's see how the indexes are responded. I'm going to bring up the dollar down here. All right, so we have the dollar selling off hard after hours. Does that have to do with Elon Musk? No, it started selling off well before Elon made his announcement. Yields coming off the session highs, not much change here at all, with volatility flat from the close. Now, the shares of Tesla, they're retracing here a little bit. Again, I wouldn't go buying this rally here. I've been watching this stock, and there are huge number of institutional sellers out there. So, you don't know whether or not they're done selling yet. This is great to get a relief rally. Will that rally get sold into? I'm not that smart. All I know is that there are a ton of sellers out there, and we don't want to fight these guys. So hopefully this holds. We'll see. Tomorrow's another day. Is it carrying through to the rest of the market? NASDAQ futures are up slightly. Not much reaction there. Spiders, not much reaction there. So not much reaction on the part of the market as a whole. We'll see how we close out the session. That 130 mark is going to be stiff resistance. Okay, let's get to it. Let's say hello to people. I bought Boyle above 2111 lows, thinking winter storm. Yeah, Boyle really took it on the chin. We started lightening up on some undefined risk trades, and Boyle was one of them. And we made money. We made money on it, and we sold it right before it really began to collapse today. And I was eyeballing it. I'm probably going to sell some premium in there as soon as tomorrow. But I'm going to be looking at the 15 strike going out to, I believe it's February. The monthlies in February. I think it's the 17th. But thank God we closed out that trade, because I'd be managing that trade. The game plan for this week was to, when we have a profit, take it, bring up cash. The L word, liquidity. And that's what we want to focus on. So is Tesla shares, or are Tesla shares done going down? Perhaps. You take a look at a daily chart of Tesla, and you can see, using the fractal trend lines, the shares bounced right off of the, like clockwork, boom, right off of the lower band of support. So from a technical basis, yeah, it looks as though we may get a relief rally. The thing to keep in mind is that we're going to have resistance up at around 138, around there, maybe 140, which is where our strike is. We have a straddle opened up there. Stochastics are very oversold. And what really has me enamored is the RSI. The RSI, where is it? I got to clean this up. Here we go. RSI, where do we close out the session? Right? Just shy of 21. So I hope they push Tesla shares lower, because I'm probably going to be buying any shares on the dip, because I think that we're going to get a relief rally here. Let's take a look at it from a monthly perspective. For the record, Tesla on the year so far is down 64.42% on the year. Q4, think about this, 64.42% down on the year. However, of that 64.42%, 52.74% came in Q4 alone. For December, down 35.62%. And for today only, 8.88% down on the session. Oh, God, this thing's. Thanks, Tim. Unbelievable. This was good software. Now it's just quirky as hell. I'm very, very sorry. Bob, remember those E.F. Hutton commercials that when he started talking about the whole room went silent? Is this the new Elon? What do you mean when E.F. Hutton speaks, people listen? That commercial, I do remember that. It could be. I think Elon's going to have to. Tesla shares have a lot more of a problem than him not buying shares. I mean, he's for all intents and purposes declared war on the machine, and the machine does not like being exposed, and they're being exposed 6 ways from Sunday. I do not think that the first half of 2023 is going to be a good half of the year at all. Good. Thanks for the heads up, Tim. Okay, so on the week, we are trading down below the lower band of the fractal trend line. That support level, if we're looking for a price target to close above this week, would be at 146. That's a big, big move by the end of business tomorrow. I don't think it's going to happen. Where's RSI? RSI is at 28.9% on a weekly time frame. So Tesla shares, they have a problem here. And before all is said and done, we could see a 120 to 115 on Tesla shares. So while it's great news that Elon is coming out and making statements, we have a lot more problems out there that the market is not necessarily focused on yet besides Elon. All right, let's talk about GDP comes unexpectedly hot at 3.2%. This helps send the market down lower, no doubt about it. The update from the update from skip that. There he is. There's the man. All right, in short, we can skip over this. Let's go to some comments. Yep, that's right, Tim. That's right. The hope from a second estimate reflected upward revisions to consumer spending. So the consumer, they're saying, is spending, which brought up GDP. This is not going to hold. This is not going to hold. I think that they're manipulating the numbers on the economy. It's clear now that the government has been lying about non-farm payrolls. They've had to come out and admit that there's a 1 million job gap that's really unaccounted for relative to uh, the household survey. So the administration is being caught in lie after lie, that this economy is not a healthy one, and the leading economic indicators are punctuating just how serious the economy is beginning to roll over and respond to the Federal Reserve's interest rate hikes. In fact, uh, the leading economic indicators have seen their largest drop year over year since 2008, and that's when you had the Lehman collapse. So I'm not too worried about this at all. And for those folks that are out there and they're saying, are we going to go into recession? Or if you're listening to a news show that's saying we may go into recession in 2023, folks, we have been in recession for months now. Yet because they changed the definition, the mainstream media, the government changed the definition, the mainstream media now uses the new definition, and they ignore the fact that we have been in recession for 2 consecutive quarters. Right here. We only have one positive read. Let's see what comes out next quarter. All right. So one of the reasons why stocks took it on the chin is that David Tepper, who happens to be a very, very intelligent guy, spoke his book, and he's short the market. You had the GDP numbers come in positive. You had Micron deliver some disappointing forward-looking guidance, and it was just a perfect mixture of bad things are brewing for the market, and the market just couldn't hold up. So let's scroll through this. Poop is hitting the fan. Family-friendly show. Uh, in equity land, as this morning's selling pressure has turned into a blood-soaked sea of red, with Tesla leading the plunge, down 11%. The S&P has erased all of the week's gains, except for the Dow. The Dow is still up. We're going to go over the monthly charts in a moment. Stick around. 3,800 will put wall. I don't know what that says, but it's the Nasdaq that is getting proper effed, down 3.75%. We did rally off that level, and the Dow is down 2%. Let's hear what David Tepper had to say. No sound? Oh my God. Okay. Sorry about that. All right, so basically, I'm not going to rehash it. Basically, what David Tepper's saying is that he's short bonds and he's short equities. It's a 9-minute clip. I didn't go over this long enough to get the real good talking points to keep it short. But in short, David Tepper, smart guy, uh, possibly speaking his book. They always do. Uh, so he's bearish on bonds, bearish on equities moving into 2023. So after today's stock market action, are stocks cheap? No, they're not. We're still very, very expensive relative to the mean. We are at the lows of the year, which is a good thing in terms of the Buffett indicator, fairly valued, and we're still extended beyond the historical norm. So, before we go into the way we're closing out the year, we got to take a look and really take the politics, please. Don't take what I say from this point forward and think of it as a Republican or a Democratic thing. Think at it from a perspective, is it a logical thing of what's being done in Washington? And are the fiduciaries responsible for our tax dollars? Are they treating our tax dollars with the respect that they deserve? If we look at Washington through that lens, we could be far more objective, and people won't come on here and get offended because they're a liberal or a Democrat. You got to get away from that. We've got to get away from it. We are being robbed. We are being robbed blind. It's come out. The reason why Tesla shares probably have a lot more trouble ahead of them is that he's exposing the machine. It's official. The FBI has tampered in at least 2 elections that we know of. They have email evidence. I didn't make this up. I don't want it to be true, but they have the receipts. And when you see desperation like you're seeing out of Washington, D.C., they would rather burn this place to the ground rather than give up power. And when you think about Republican and Democrat, there's no difference. It's a uniparty. And this is the environment that we live in. They passed this bill today, and this is one of the reasons why equities rallied off the lows, because there's going to be a lot more spending, a lot more debt that's going out there. The U.S. Senate today, a $1.7 trillion omnibus. I hate that word. That just means that you are getting royally screwed. Omnibus, 4,000 pages long, delivered to the senators less than 24 hours before they're supposed to vote on it. That ought to be illegal. That is illegal. In my mind, it's corruption at its highest level. And we're standing for it. The legislation provides $45 billion for the Ukraine, for a war, which we've already provided $35 billion for. There's no accounting for that money. Those arms are finding their way into other countries already, and they're forbidding any type of audit of the original money that we sent over there. We are being royally robbed. They are robbing the Treasury, and there's no money in the Treasury, so they're printing it. We need to pay that money back. All the while, we have Kari Lake, and again, this is official now. They have 3 bombshells that point to election irregularities in Arizona that could very well flip that election for at least get a recount in Maricopa County. I will refer you over to Kari Lake's website or Twitter page. I'll give you this email. We're not going to go through it, but this type of corruption is insane. Our elections are being undermined, and our borders, we're spending close to $100 billion after this bill gets sent over to the House for passage, which it's gonna. That money goes over to the Ukraine. It's nearly $100 billion that we know of that has been sent over the Ukraine. Yet that money's to be used for their borders, to defend their borders. Yet our borders remain wide open with an invasion force, 8 million people entering this country. No education, can't speak the language, a major drag on this economy? Who is going to pay for their welfare benefits? You, me. We are being royally screwed. And this proxy war over in the Ukraine only gets worse. We're sending Patriot missile batteries over and into the Ukraine. They can't operate those Patriot missile batteries. Those require, from what I understand, fact check me on this, from what I understand, they require U.S. troops to run those machines. If they're going to bring them inside the Ukraine, they've already said that the Russians have already said those batteries will be a target. And if American soldiers are killed, does that escalate the war up further? You bet it does. So this is what we're looking at going into 2023. And nobody has a sound mind in Washington except for a few Republicans out there. I don't know of many Democrats, to be honest with you, but you know, the Hawaiian lady, what's her name? I forget her name, but Sinema I don't trust, Manchin I don't trust. What's her name? I forget. She spoke a few days ago too, and I forgot about it. What has come up after hours? Then I'm going to go to the monthly charts. All right, that's it. Let's go to the monthly charts. So, how are we poised to close out the year, folks? We have only a few trading days left to go in the year. Just like with Twitter files, most media not reporting. They're bought and paid for. Project Mockingbird. Look, Google that if you're not familiar with it. Project Mockingbird. There's the only way this is going to get resolved is military tribunals. Good evening, Franklin. How did our country get to this point that a few 100 people screw? Yeah, I think it began decades ago, like the boiling frog analogy, where they slowly but surely, incrementally turned up the heat, and people say that we're about to boil. I think that we are boiling now. All right, let's talk about the monthly charts and see how we're closing out the year. The monthly chart of yields, while off of their high, they have bounced off of 3.4. So let's take our crayon out. This is going to be critical because we have a Federal Reserve that is telling us that they're going to raise rates into an economy that is clearly rolling over and rolling over hard. Taking a look at the bond price, this is the TLT. We had a nice rally and we're still up on the month, but we are reversing off the highs of the month. And if we close at where we're trading at current or lower, this is a very bearish setup. So if I was Tepper, yeah, they rallied it right into resistance, and he was probably shorting right into that resistance level. The tip market rallied, reversal, resistance at the 110 mark. So the tip market is clearly thinking that the Federal Reserve is going to remain very active and aggressive. Weekly chart. As a matter of fact, I didn't go to the Fed's balance sheet, which we usually do. Wow. Rough week for the tip market. Let's do a quick peek. This is not the one I use. It's an interesting one, but not the one I use generally. Every week they release. Here, I have it saved on Google. Okay. So here we have it. Let's drill down. They continue to sell off. Lows of the year. This is probably this is 85.83. This is the lowest we've been since October of 2021 on the Fed's balance sheet. So this is not stock market positive, folks. It's good that they're doing it, but this is hard medicine to swallow for equities. So buckle up. This is a major problem going into the new year for traders. It's the right thing to do, but it's not going to be good for investors. I'm going to refresh my screen. This is so embarrassing. Frank, and I saw your message. I have no idea what's going on with this software. All right, so you guys are seeing this. The dollar monthly view, nice correction off of an overbought condition. Looks like we're holding 28. Stochastics are rolling over. Let's do a deeper dive to a weekly view. Consolidating. We may get a rally here on the dollar. Be careful of the mining stocks, gold, etc. Gold in particular sold off today. As for the VIX monthly time frame, the VIX is now positive on the month, well off the highs of the session. In fact, this is a pretty ugly chart when it comes down to the Stokes. Let's go to the weekly view. Down on the week, if you can believe it, the VIX is still down on the week after today's price action. What did it do today? Big move up higher, a bit of a fade. So let's take a quick peek at the quarterly chart. And this is the chart that really gets me freaked out when I look at it. Here's that cup with handle formation on stochastics. And we're off the lows of the quarter. Trader Isaac, should it be concerning gold stocks didn't make higher high before reversing? No, I think that they're just responding to A, a rising US dollar, and frankly holding up pretty well, and B, the sell-off in the market. Keep in mind that when you get these big downdrafts or these big sell-offs, everything goes down. Even gold was down today. So no, I wouldn't be too worried about it. I think that longer term, as the wheels begin to come off this economy, it's going to be the gold stocks that benefit. Now, as we begin to go into the Dow transports, here's where things get ugly. So we had attempted to break out on the month, but we have been rejected. And we are now near the lows of the month on the Dow transports. This is bearish stuff. And when we take a look at the weekly chart, we have broken down below the lower band of support. Can we rally back? Sure. One trading day left to go. Is it probable? No, that we're going to recapture support here. It's highly improbable. So we have a couple of sectors that we watch. One, the Dow transports. Two, consumer discretionaries. These are our canary in the coal mine for the rest of the market. As go these sectors, so goes the rest of the market. So the Dow transports are breaking down. The Dow Jones Industrial Average, they broke out last month. Remember that. If they fail to hold this breakout point and we close back down and into this prior bear flag setup, that is what you call a breakout point failure, also known as a bull trap. Think of all the people that were bullish on this market and they bought up here only to get sold into. Don't let that be you. Weekly view. We are still up on the week, believe it or not. So the Dow Jones is less worse than names like the S&P 500, which on the month is down 6% now. It too broke out last month. But as with the Dow Jones, it has given up that breakout point, and it's highly improbable that we're going to recapture it. So as we look into 2023, I need to change up where I believed that we were going to get a Santa Claus rally. I thought that yesterday was the beginning of it. Today, we may limp sideways throughout the remainder of the year. We may even get an up week the first week of the year, but we're going to be looking for opportunities to short this market and short it pretty aggressively and position ourselves on the right side of this trade. We will be looking to short the gold stocks and gold in particular, but not quite yet. We'll talk about that more in a moment. But the S&P 500 monthly time frame has given up monthly support. We have a few trading days left to go, maybe with a rally and recapture. We remain in the downtrend channel. We bounced off of support today at around, what is this, 376. The weekly volume is low. Let's go to the daily chart. Good rally off the lows. I'm not convinced that we're done going down here. You know, volume was high today. It wasn't that high. You know, for the move that we saw. I mean, this morning's price action. The last time I had that sick feeling that things were beginning to come unwound was last January. Was the last time, and it's been a down year all year long. And prior to that was COVID. So instinctively, you know, I waited for that first hour of trade to get put behind us. And then as I realized that there was no cavalry coming to the rescue, we began to raise capital and get ready for the next shoe to drop. So we're glad we did it. We stopped out of Coinbase. That bounced back a little bit. But it's the discipline, you know, even though it bounced back, you can't kick yourself in the back of the head for abiding by your discipline. It could fall apart tomorrow. Amazon, we stopped out of that. Small loss there, and it kept falling. So that I certainly don't regret doing. So we raised capital. We had a S&P Strangle that was in danger. We took that off the table, raised more capital. We can always reestablish, but first, you need to have the liquidity to be able to facilitate clear thought. Get your hedges on, meaning your short protection, so that when you get a down open like you do today, you're getting paid on your hedges, and that way you could start reestablishing positions on what we'd like to do is sell premium. But we want to have our hedges out there first before we start doing that. That way we have our rainy day fund set up just in case this selling begins to really pick up. The triple Qs, a basket case. Very close to an outside reversal month, I should say, month. Lower highs on RSI. Weekly view. Another lower high on stochastics. These are your momentum indicators. and we're just barely holding support and could easily break the October lows very, very soon. Now, the Russell 2000 or the IWM is very concerning here in that we have put in a clear shelf of resistance. Let's call it at the 190 mark. Why did that not save? There it is. So this is a short in the making. We'll probably buy the TZA weekly view. We're breaking down here. We broke down last week. This week, a continuation breakdown. Take a look at your moving averages. The 50-day in blue, poised to close down below the 200 period moving average in red. And in green, you have the 20 period moving average threatening to take out the 200 period moving average. This is not a sign of a healthy market. So warning flag on the track. The banks, possibly a breakout point failure. We have a couple of trading days left to go. We broke out last month. This month, we're giving it all up. Weekly view. We're still up on the week, but 34 is clear resistance. And I just reminded myself, I forgot to go over one of the most important charts that we should be talking about, and that is the yield curve. And the yield curve, folks, we talk about this all the time. The yield curve is beginning to steepen. That's when you begin to worry about this market. And what happened today? It began to fall apart. Technology, we're setting up for a short here. I mean, here's your resistance level. And here is support at 115. So the XLK setting up as a short. Consumer staples holding the breakout. This is one of the better performing sectors. Clearly broke out last month. It's probably going to retrace all the way back down to 72.50. We'll see whether or not it holds it. Now, the other sector that broke down earlier in the week on a weekly time frame and now on a monthly time frame, consumer discretionaries. Remember, GDP was revised upwards. Why? Because of consumer spending. What did the XLY, the consumer discretionary names, do today? They didn't rally. They didn't find much solace in that report. So we are clearly down on the month. We took out the highs and we also took out the lows. This is what you call a bearish engulfing bar. If you're new, I have a 5-part video tutorial free below. My top 5 favorite candlestick patterns. Go check it out. Let's take a look at a weekly chart. Brutal. This is a continuation breakdown. We hit this week 52-week lows. In fact, we have hit this week multi-year lows. We haven't been down at these levels since June of 2020. Think about it. And this is not getting any better. Whereas food prices, this is the DBA, agriculture prices on the month, flashing a bullish key reversal. They're going up higher in response to inflation and the fear that the Federal Reserve is going to have to take its foot off the pedal. Let's go to a weekly view. Beautiful breakout here on a weekly time frame. Energy beginning to break down. We're barely holding on to support, which we recaptured 2 months ago. We have taken out the lows of last month, and we are just barely hanging on by a very, very thin thread. Weekly view. And we're up on the week, if you can believe it. But I don't think this holds. I think this is a dead cat bounce, and that we follow through to the downside fairly soon. Let's go to a daily chart. Woof. Not pretty. West Texas Intermediate crude, bouncing off the lows of the month. Stochastics is still declining, going in the wrong direction. This could easily break. Daily, weekly view. Weekly view. We are up on the week, but we have resistance immediately above. Be careful here. This is West Texas Intermediate crude. This could break. Let's go to a daily chart. Not a horrible close. We bounced off the session, still lower though. Oh, this is a monthly chart. Sorry, I got to get rid of this. This keeps happening. Daily view. We broke out yesterday out of this downtrend channel. Today we reversed to recapture. If we fail and we break back down and into this trading range and resume the downtrend, look out below for energy stocks, which we shorted. We covered that short. We made money there. I'm looking to reshort energy yet again. As for natural gas, folks, be very, very careful here. We booked profits, was it yesterday or the day before, on Boyle? And we did it right before our put side strike got tested. So we booked our profits. We're out. Now we're looking to reestablish, but at a much further strike than from where we're trading right now. Probably the February 17, 2023 put contracts at the 115 strike. No, at the 15 strike. 15 strike. Gold, a little bit of a trouble. Took it on the chin today. I think that we've come a good ways, but we're probably going to need to retest 1750. Now, while I'm bullish on gold going into 2023, I'm not ready to put on a long position using options yet on the GLD. I'm looking for a pullback and a retest of that 1750 mark. Then I'm going to act. The options are fairly cheap right now. Let's go to a weekly view. Yeah, bearish topping action here. I would avoid gold right now. I love gold longer term. Right now, avoid it. The markets are telling you there's sellers above. As for the mining stocks, we're still up on the month. And even on the week, I think we still may be up here. Yeah, we're up. Nice reversal bar. So the gold stocks are holding up well. And these are the names that we're going to want to be a part of in 2023 in a very big way. Early on, if this market begins to break down, don't think that the gold stocks will not go down. They will go down. Take advantage of that sell-off and use it as an opportunity to build on positions. Let's go over, and we only have 10 minutes left. We'll take some chart requests. If you want to pop them in, let me go back to my screen first because I'm probably going to lose you, which I did. I'm aware of it. Let me get my screen up, and I will reshare my screen. I have There we go. And we have Tim Madman. All right. So does Apple see 120 before 140? It's a good one. Let's take a look. The monthly view, I mean, obviously we have more time left in the month here, but were we to close out the month today, I would have to say that 140, which is up here, if we close down below this support level at 134, I think that we press lower, and the probabilities of us seeing 120 first are greater than us seeing 140. Clearly, RSI is going in the wrong direction. Weekly view. Again, we have broken down weekly time frame, and here are your fractal trend lines, implying where you have support and resistance. The last time we tested this lower band was back here in June of 2022. We haven't come near there yet. So I think that we could easily hit that 120 mark before we head up to 140 on Apple. Daily view. Now, on a daily time frame, we've broken the lower band of the fractal trend line, which is pretty goddamn bearish. What a horrible day. And don't let the rally off the close lure you into a false sense of security, please. AGNC. Avoid. You got to avoid this. Weekly chart, you're running up and into the upper band of resistance. You only have a little bit of room left to run. Too much risk, not enough reward. I would avoid this one. And on a daily chart, you could see the heat maps are telling you have resistance above. And if I overlay weekly resistance on top of the daily chart, folks, we're using TrendSpider. I don't think that they have their promotion going on anymore. Maybe they do. Trend. Yeah, you only have a few days left here. It was 60%. Now it's only 55% off. So looks like they're gradually taking it away. So get 55% off, limited time. Use the link below to take you on over there. TrendSpider. So I would avoid AGNC. Way too much risk above. Avoid it. Trinity Capital. Daily chart. I'm not liking. You have resistance immediately above. Weekly chart still has some room to run. I would not initiate a new trade here. Because, again, you have resistance above. This is going to act as a rising upper band of resistance. But it does look like we bottomed out. You just got to give it some time. How's the monthly chart look? Yeah, it looks like we stopped going down. But from a risk-reward entry point right now, I wouldn't suggest it. I wait for an orderly pullback and then look to enter on that pullback. I'm using AAPD. I'm not familiar with it. Oh, it's a one-time short of Apple? Out of curiosity, why not just short Apple? I didn't even know they had these. I've been seeing these all over now. Direxion. How long has this been out for? Oh, it's very new. Okay, that's why. You have some resistance above on AAPD, but there's not a lot of data here. I would go with the I would trade this vehicle using the Apple chart. I wouldn't use this chart. Not enough data, and I don't know how much time decay. It's only a one time. I wouldn't imagine it would be much time decay in these. TF Hatter, hey Bob, thanks for what you shared. You're very welcome, sir. Do you have any thoughts on for nat gas to fill the gap from the past week's 52-week lows on boil today? I would have to go to the UNG for that. I wouldn't trust Boyle. Well, we did close at, this is only a daily chart. We are at the lower band of the fractal trend lines on UNG. You can make the argument that this could be bought now with a tight stop below it. Let's go to a weekly view. But look at the overhead resistance here. The heat map is showing, man, you got a wall of overhead supply. I would like to see us continue lower here and bounce off of either 15 to 14.37 per share. Let's see if we hold those levels. And then I would look to initiate a long position or sell out of the money premium, out of the money puts, and just generate cash flow. I'm sure the implied volatility on Boyle in particular is very, very high, so they'll pay well. But as a contrarian, I want to sell premium on weakness. I wouldn't want to sell the call side right now, but I want to sell the put side. And if you could get another sell-off down to these support levels, I think you'd be better off, TF, waiting for those support levels to get hit. You're welcome, Tim. We'll leave it off with Franklin and BX. And if I forget, Merry Christmas to everybody. Happy Hanukkah. I know many of you are going to be cutting out. BX weekly chart bottoming out. We have a retest of the lower band of the fractal trend line. And we also have a lower band of support in blue. So this could be flirted with. It held up pretty well today. It's looking okay. But ideally, we do another retest down here just to get that double tap to see whether or not it holds up and to see also how we close out the week. So I like the chart. I'm just a little bit sketchy right now on the overall market because if the market goes, Blackstone is going to go no matter what. So let's not, technical analysis is great, but when you have an event, whatever that event might be, a major sell-off in the markets, everything is going to go down. So please, let's not get lured into, this chart setting up nicely. It could quite very well hold here, assuming that the overall market doesn't fall apart. But if the overall market falls apart, this is going down no matter how good this chart looks right now. So size matters. Sorry about that, but size does matter. So stay small, and everybody have an awesome, awesome Merry Christmas. Same to you, Trader Isaac. Quite possibly, yes. Monday Night Futures. Thanks for the reminder on that. You're welcome, TF Hatter. Everybody have an awesome night. Talk to you soon, and enjoy your holidays. Be well.